So in today's video, we'll talk about, are the bears in denial? And I also had the question, why do I always wear a hat? So I'll answer those two questions and more on today's video. Stay tuned. Hey guys, I'm Josh, and on behalf of Karen Clark, BlockRoots co-founder, we just want to say welcome. And if you have not yet subscribed to the channel, please do so below. The only thing that you have to do is go ahead and click the red button below. You'll also be put in on a weekly drawing for $100 of Bitcoin. Each and every week we do that if you subscribe as well as engage with the video. So make sure that you guys do that if you haven't so already. And in today's video, we'll talk about this current uptrend that we see with Bitcoin, how it finally broke out of the range to the upside. And is this bullish? Are bears in denial? So we'll talk about that. We'll also look at Chainlink, as it's looked pretty amazing over the past couple of days here. So we'll look at that as well. And we'll also zoom out to compare the first few weeks or so of this current recession with the stock market and the major market sell-off compared to the 2008 recession and the 2000-2001 recession as well. So we'll look at those. So let's go ahead and get started. By the way, make sure to do your own research if you have not yet. Make sure that you always seek out a financial advisor for financial advice. Everything here, it's not financial advice. It's our own opinion here at BlockRoots. Oh, and by the way, to answer that question, I had somebody ask, why do I always wear a hat? And I have to say that if you didn't know, I do need a haircut. I always wear a hat, at least recently, because my barber shop is closed. It's not a non-essential, it's a non-essential place of business, just like most barber shops are. Plus, I work from home, so it's a lot easier just to throw on a hat than to do my hair. So that is the pure and simple reason why I always wear a hat. Maybe we'll take more questions in the future like that. Just ask me anything. But for now, that'll do, because we want to talk about the Bitcoin price. So the good news, at least, is that you're going to notice here above this blue line that price has finally broke out of that 6,600 to 6,900 range that we've been sitting at for days and days, right? We had this ascending triangle. We're still technically in it right now. So the key question with that is, are bears just in denial? And should we just all flip bullish right now, flip our bias, and then just start to buy the dips right here? So that really depends on whether or not you're doing this for the long term, or whether you're a short-term trader. Are you a holder or are you a trader? And that really depends on what you should possibly do right here. Because if you're a trader, I would say certainly that this could be a good idea as far as to buying dips and selling. But if you're a holder, again, we need to zoom out and look at the entire picture, okay? So we'll look at that here on today's video. So we'll go ahead and look at some bullish perspectives as far as I go to start it off. Why not start off with the good news, right? And pair that with some reasons to be bearish as well, though, okay? So let's first look at where Bitcoin can potentially hit before a pullback here. Now, one of those places is between 7,800 to 7,950 or so, and the other place being around 8,100 to 8,200, okay? So as far as 7,800, you're going to see here now that we have basically the first horizontal resistance as far as the recency above, okay? And you're also going to see this high volume node here where there was a little bit more volume traded in these areas compared to right below it where we left around 6,900. Okay, so these typically will act as resistance with the horizontal as well as the high volume node. So this is potentially a place where a lot of people are going to be taking profit between 68 to around 69.50. This would also be a place that could liquidate some people. So people who are going short right now, maybe late shorters. We saw people maybe move short around 7,400 with a small pullback. But anybody who's potentially shorting around this area, we could see if you're late to the party, you tend to get punished, right? So that could also be a potential place where price pushes up to make sure that those high leverage shorts get liquidated. Now, 7,800 was the bottom of the previous range. If I move to the day chart here, and I say previous range, I mean the range between September through October before the big pump from China that we saw that took us from 7,000 up to over 10,000. You can see right here that this is also the point of control around 79.40. So again, that is the price point, a price level where the highest amount of volume has been traded. And you're going to notice that that has acted as a support as well as somewhat of a resistance here, but primarily as a support. And then we know that support will usually flip into resistance. So that is a main area that we're watching right now as far as that goes. Now, the other place, if we go again to this day chart, I'm going to go ahead and take some of this off. I'm going to put on the moving averages. Specifically, what you see here is the 50, the yellow is the 20-day, the 50 is the 50-day, which price rejected off of initially. And then we have here right beside each other the 100-day and the 200-day moving averages that tend to act as support and resistances as well, specifically with higher time frames, okay? So there's some major confluence here, along with the fact that there's also a high volume node. Okay, and not to mention you have around the 8,000 psychological resistance. We know that big whole numbers tend to act as resistance or support psychologically. So you have all this lining up right here, and you're going to notice that the 200 and 100 right here in the high volume node. And with that said, I think that that could be also another potential place that we see price move up. If we see price break above this 50-day moving average, I don't see any reason why price can't move all the way up to 8,000, 8,100, up to as far as probably 8,200. But from there, I'm certainly looking at those places as a potential take profit area or a place to actually scale into some shorts. But you also may be asking, why should anybody be bullish anyway? And I think the fact of the matter is it primarily lies with the stock markets, that they've performed quite well in light of the negative news recently with the pandemic outbreak. And still, that's a key market to keep your eye on, because we still have a moderate correlation, as we talked about before, with Bitcoin and the S&P 500. If you don't watch stocks, make sure that you keep an eye on the S&P 500, which is also known as the SPX for the ticker, okay? And so I've got that right here. We'll take a look at that shortly. But again, a lot of people I know in crypto, they don't trade stocks. I asked that recently, and I think 60% of people said that they only stay in crypto. Some people used to trade stocks and they moved over due to the volatility. Some people just don't believe in stocks. But with that said, I know a lot of you primarily stick with Bitcoin and crypto assets. But if you don't watch the S&P 500 of the SPX, because that is where we're seeing the moderate correlation with Bitcoin. Now, we also have the halving coming likely in May, and we know with the halving, the block reward will be cut in half. Inflation will finally drop, I think, below 2% at this time around, and we've seen typically bullish price action happen months after this, after the halving. Now, even Plan B has said, and if you don't know Plan B, you can follow them on Twitter, 100 trillion USD, and you know Plan B from the stock to flow analysis, and they even say, Plan B says to maintain $7,000 since October 2017, Bitcoin must have had about 400 million new cash inflow every month the last 2.5 years, 30 days times 24 hours times 6 blocks times 12.5 BTC times 7K, assuming all trading is a zero-sum game. And after the halving, we only need around 200 million per month to keep $7,000 levels. If $400 million stays and continues, then rocket ship. So what Plan B is basically saying, we don't need as much money to inflow into the market to sustain these levels. The current money coming in is more than enough to push price up after the halving. So again, that is another bullish case as far as price continuing to move on up for Bitcoin. So keep aware of that. Now, with that said, though, we also have to realize that Bitcoin and crypto is a very, very, very small market compared to traditional assets. Okay, we have to understand that there's trillions of capital in the stock market, and that does impact the prices of the smaller markets such as Bitcoin and crypto assets. So we're going to go ahead and talk why I, Cantor & Clark, and maybe a few others aren't quite bullish yet and are bears in denial. I don't think that they're in denial. And even though we're not long-term bears, maybe short-term expecting some more pullback, but we do expect that we'll see possibly prices under 6,000 again, and we'll talk about that. Now, as I just said, the stock market is a much larger market than Bitcoin and crypto, and most of the people who have the ability to move the market back up in crypto to push those prices up are also heavily invested into traditional markets. Okay, so because of these assets are known to be less risky, people tend to invest more in stocks, right? Lots of money. And there's also a lot of big players and institution. That's where their attention lies, is the stock market. Okay, so if the stocks continue to sell off, you have to realize that Bitcoin is going to pull back with it. Primarily due because, again, there's a moderate correlation as we've talked about, but also price is back up to some attractive levels. So again, if I go back up to the Bitcoin chart, you're going to notice that prices went up, from here, 107% from the bottom. Okay, that's a very attractive price if you're looking to take profits, being over 100%, gains from the bottom. If these people potentially bought there or bought even here at the close, you're at 72% up. Okay, that's a really attractive place to take profit. And like I said, we can even see higher up here, which would be if you're looking from the bottom up to 8K, you're looking at 126%, 125%. That's really good. Now, many big players invested in Bitcoin will also be looking to buy stocks lower. Like I said, if stocks sell off, they're wanting to get into cash. And so many of the billionaires that I've seen, they haven't been quite willing just to jump in quite yet or pull the gun yet. So we know that, hedge funds, big investors who have conflict of interest aren't just going to share their viewpoint on the markets. That's just not free advice they give to everybody. If they're saying we buy or we sell, sometimes you have to take that with a grain of salt. And a lot of times what we see is that still a lot of people really haven't been quick to jump the gun as far as the stock market as well as Bitcoin. And one big reason is that we're so early into this recession. We're looking at around 6 weeks or so. And so if I go to the S&P 500, you're going to notice that 1, 2, 3, 4, it took around 4 to 5 weeks to hit the bottom. So we'll say around 6 weeks or so. This is the current week. So we're around 6 weeks in or so of the pullback from the top. Okay, so that's not very long. And so in 2000, let's go to 2000. I'm going to go ahead and zoom out to 2000, and this is the last two recessions that we had. It was 2000 through 2003 and 2008 through 2009. And you're going to notice from top to bottom here, it took over 924 days to actually hit a bottom. Now, if I even go to where price moved up, it took over 1,000 days, okay, for price to go from the top all the way down to this third bottom here, right, 1, 2, 3, for price to move up from 2003 all the way up to 2007, 2008. Okay, so that took a while, right? And this took over 1,000 days before the long-term uptrend started. All right, that's a long time. And even with that, with 2008, we saw a 50% pullback from around 1583 to around 755. We saw around a 50% pullback, and that took over 427 days alone. Then it bounced, this 50% drop, bounced 20-something percent, and then dropped another 29%, and then continued on from there. And so from the top to the bottom here, it took over 500 days for the S&P 500 to bottom, okay, for the stocks to bottom here. So close to 1,000 days until the uptrend started happening, over 500 days for the uptrend to happen. And if we go to here, look how small this looks compared to the last two recessions, okay? So if I go from top to bottom, so if you look at the bars right here from top to bottom, it only took around 33 days or so, 34 days. And then we're only around 48, 49 days out from the original top. And so, with a global pandemic, with over 10 million people just in the last 2 weeks alone claiming unemployment, to be only 48 days from the top, 33 days or so to the market bottom, do we just think that that's it, right? And so for some reason, if we think that the market is already on an uptrend, that took significantly much faster to hit the bottom in the uptrend starting than the last two recessions. So if you don't know Howard Marks is actually the co-founder and co-chairman of Oak Tree Capital Management, which is the largest investor in distressed securities worldwide. And Mark has a net worth of over $1 billion and over $2 billion in 2019. We know with the recession, it may be less than that. But he also puts out a investor letter from time to time, And then we can actually look at that. I'll also include that in the notes below. I have a copy of that. Even though he mentioned in his letter reasons to be optimistic, including the flattening of the curve as far as the pandemic, right? And then also too with the stimulus efforts from the Fed and the government, there are still reasons to be pessimistic in his eyes as far as the current market. And then recently too, Masari did a great job as far as summing up his opinion in a recent email. And I want to kind of take a look at that right now. And so let's go ahead and look at this highlighted section here as far as these areas of cons that Howard Marks actually talked about or discussed in his letter. So one thing to look at, one reason to be pessimistic, to not think that the bottom is in and we're already out of this recession, is that hospitals are and probably will continue to be overwhelmed. We know with New York, the death total, I think, has actually increased to a new high over the last few days. In the United States, it's hit multiple highs. And we'll have to resort to triage decisions, which is very bad for the collective psyche, okay? Now, also some other things that I highlighted is that some sectors have a medium-term, not just short-term revenue shock. Others have a permanent shock, and that unwinding hasn't happened yet. Now, if you think about that, some actual recent we see is the food and restaurant industry, right? Now, with that said, there's a lot of other markets that are B2B or business to business that haven't felt the effects yet, but they will when a lot of these other businesses actually go out of business. Then their customers actually go out of business, therefore they don't make money. So you'll see some of this unwinding to actually have a later impact in Q3, Q4. Part of that's going to be an unwinding to have a wave of debt defaults that might not hit until, like I just said, Q3, Q4. And there's a long tail to this recession, and that could be exacerbated by a vicious cycle of downgrades, margin calls, liquidations, and forced selling to come, all right? So not thinking that it's quite over just yet. And the current oil crisis jeopardizes the American energy industry, which employs 5% of the workforce and accounts for a meaningful percentage of capital investment. And lastly, the sharp negative wealth effect will reset consumption and investing habits for a long time. So again, when it comes to investing and consumption, there's a lot of pleasures in the American economy that we take advantage of that maybe a lot of people aren't going to be able to take advantage of. And that's, again, the movie industry and how that impacts everybody. And when it comes to the movie industry and theme parks, that impacts Disney. And Disney actually puts on leave 77,000 workers, right? So that'll have a lot of impact on other sectors. As bullish as we can get right now, we still have to zoom out and realize that many sectors of the economy haven't even been hit yet, okay? And so this is something that you need to keep in mind. And if you agree with this, that's great. If you don't agree with this, I would just love to hear your thoughts about it. So leave your opinion below in the comments. Do you think that we're actually in an uptrend? Do you think that the bottom's in, or do you think that we continue to see a drawdown recession? But zooming back out on the Bitcoin chart again, in the crypto market, don't be discouraged because, as I said earlier, Bitcoin can continue to move up in the short term, okay? And so as high as 7,800 to up above to 81, 8,200, where the 200 daily moving average and the 100 daily moving averages are also. And there's also a couple of alts that have been performing really well, and those two alts are two of the alts that you can actually trade on Phemex.trade, and that is Tezos, as you'll see right here, that hit up as high as 24% over the past couple days. And so it had multiple, I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight green candles on Tezos. And so it went as high as over $2, I think, and 10 cents. And we also had Chainlink, as I said earlier. And Chainlink, I've been talking a lot about that on my Twitter account, which that had 11 daily candles, green candles, 11 4-hour candles in a row. So did Tezos, if I said daily, but 11 4-hour candles in a row that were green and hit up as high as 27% plus. And like I said, with Bitcoin and the S&P 500 have all had a pullback here slightly from 7,400 to around 7,100s. You also see that with Link and Tezos as well, okay? But both of these have been outperforming Bitcoin by a lot. And this is the Chainlink Bitcoin chart. So again, the pairing, Link has outperformed, has gained on Bitcoin up to 18% before the draw down, but now it's still for about 14% outperforming Bitcoin over the past couple of days. So it's really bullish if you're looking to trade something. If you don't like the sideways movement as far as Bitcoin, you can jump into Tezos and Chainlink. You can do that either on a spot exchange, or if you want to margin leverage, you can of course go to Phemex.trade and do that there. And you just don't want to get liquidated with that said. So keep an eye out on those two altcoins. There's not a lot of altcoins that I trade, but I will trade Tezos and Link because they do have a lot of volume and liquidity when it comes to those. But Bitcoin, again, small pullback. I'm not too worried about it as long as we can stay above around the previous range, which was around 6,900. If we can stay above that area, okay, right here, and we don't fall back down in here and accept that area again, then we're going to continue to move on up, that I think. But if price does pull back below 6,900, and it does, at least on the 4-hour daily on the higher time frames, if it does close down there, I do expect the price to continue to move on down, and that the 7,400 would be the local top. And so that's what you want to look out for, and just understand that we're looking for price to stay above 6,900, preferably 7,000. And if it can do that, then it's very likely that we continue on an uptrend. So hopefully today's content was valuable to you. Again, we have targets of around 7,800 up to 8,200. We talked about the S&P 500. As far as the SPX, we know that we're only a few weeks in or a couple months into the recession. The SPX, before we saw the recession go for 500 to over 1,000 days. So it's hard to think that we're just now starting the uptrend. I think that there's likely more to come as we see the impact of the economy that goes into Q3 and Q4, as Mark Howard shared that in his recent investor letter. So make sure to check out all these things. I'll drop some of this in the notes below. And make sure to leave a comment if you have not yet subscribed. If you find this content valuable, make sure to do that. Leave a comment, engage. You'll be putting $100 as far as the Bitcoin drawing at the end of the week. And make sure to check out BlockRoots.com. If you haven't done that yet, BlockRoots.com, that is where you'll find more education on markets and trading. We'd love to have you be a part of the community. So with that said, I hope that you guys continue to stay healthy, you and your family continue to be safe, and I hope you have a great rest of your day. Stay healthy, and make sure that you always do your own research and trade effectively, and we'll see you guys soon.